Thanks. Okay, so this next question is about the four-factor test, specifically economic connections. So if I have an apartment in Sydney and a bank account which pays the mortgage, would that be likely to be deemed an economic connection?
The apartment would be, because that is a taxable Australian asset and therefore, would form part of that connection. The bank account, not necessarily so, because they refer to it as significant. So, there's no definition of what significant is, but significant, I would imagine, would be at least $10,000, $20,000, maybe more. But, generally speaking, a property, yes, is economic ties, but, it's the bank account would have to be a reasonable proportion.
Would that include then like a superannuation fund or a share portfolio?
A superannuation fund is not included. Basically you're talking about, again, according to the initial draft, that you're talking about property, you're talking about family trust interests. They're the main things that are connected there. So superannuation is specifically suggested to be left out, as are shares.
And you mentioned property. So if you owned a property and it's not rented out, but it's only used by your family upon visiting Australia, would that be included?
It comes under two parts. That wouldn't be included under the economic interest. What that would be included would be under the accommodation available. So, what they've said is that it can be either one or the other. So if you've got a property like a holiday home that you can use, then that comes under the accommodation available factor test, not the economic interest factor test.